You know what kills me? It is not the investors who miss a stock entirely. Those people sleep fine. The ones who keep me up at night are the people who got the thesis exactly right. They saw nuclear coming. They bought Oklo, they bought NewScale, they watched those stocks double and triple, and then they held too long, or they bought too late, and they gave every single dollar back and then some. That is not bad luck. That is a skills problem, and a skills problem has a solution, which is exactly why we are here today. Because what I'm about to walk you through is not another list of hot tickers to chase. It is a framework, a way of thinking about where money flows inside a massive technological shift, and 5 specific companies that I believe are positioned to lead the next leg of the AI boom. Not Nvidia, not Palantir, something bigger, something earlier, something most retail investors are still completely blind to. So pay attention, because this conversation could genuinely change the way you think about investing for the rest of your life. Before we go any further, do yourself a favor and subscribe to this channel. Right now, I am not asking you to do me a favor. I am telling you to do yourself one. The research and the frameworks I share here for free are the same quality of thinking that institutional investors pay serious money to access every single month. One well-timed idea from this channel, sized correctly, can do more for your financial future than 10 years of guessing. Subscribe, hit the bell, and let us get into it. Here is the thesis, and I'm going to say it plainly because plain language is always more honest than complicated language. Artificial intelligence is the most power-hungry technology that human beings have ever built. Not slightly power-hungry, extraordinarily, historically, almost incomprehensibly power-hungry. A single NVIDIA GPU running continuously generates as much heat as a burner on your kitchen stove. Now multiply that by 100,000 chips inside a single data center. And then multiply that data center by the hundreds that Microsoft and Amazon and Google and Meta are currently building, or have already announced. U.S. data center electricity demand is going to grow by roughly 4 times within the next 4 years. Not 40%, 400%. And the brutal, inconvenient reality that nobody on television wants to talk about, plainly is this: the United States electrical grid cannot handle that load. Not even close. Solar and wind are wonderful things, and I have nothing against them, but they are intermittent. The sun does not shine at 3 in the morning when a data center is running a training job. The wind does not blow on command. And battery storage technology is nowhere near the scale required to bridge those gaps. For industrial power demand of this magnitude, the only technology on Earth that produces clean, reliable, around-the-clock baseload electricity in large quantities is nuclear power. That is not an opinion. That is physics. And the smart money, the institutional money, the money that moves markets before you read about it in the news, figured this out a while ago. The question that matters for you and me as investors is not whether nuclear powers the AI build-out. It will. The question is which companies along that value chain are going to capture the most durable, most defensible pieces of that economic opportunity, and whether you can get positioned before the next violent move upward that this sector is historically prone to making. Now, let me give you the mental model I use when I look at a theme like this, because the mental model is more valuable than any individual stock name. When a major technological shift creates a bottleneck, and make no mistake, energy is the bottleneck of the AI era, and the same way bandwidth was the bottleneck of the early internet era. Money does not flow evenly to everyone who touches the theme. It flows to the companies that own the most critical, least replaceable piece of the puzzle. In the internet boom, Cisco did not write a single line of software, did not build a single website, did not sell you a single subscription. They built the routers and the switches and the physical infrastructure that made the internet function, and they became one of the most valuable companies in the world, because without them, nothing else worked. That is the kind of company I look for inside a mega theme, not the obvious headline name, the indispensable infrastructure name that the headline name cannot function without. For the AI energy story, I think about the value chain in 5 distinct layers. And I want to walk you through each one because understanding the layers is what tells you why these 5 companies matter. And not just 100 other companies that are also tangentially related to nuclear power. The base layer is fuel and logistics, who physically moves uranium and spent nuclear fuel from one place to another. The second layer is reactor design, who is actually engineering the small modular reactors that will power these data centers. The third layer is regulatory certification, who has the legal permission to build those reactors in the United States right now. The fourth layer is power conversion, who takes the electricity that comes out of a reactor or off the grid and converts it into the precise form that an AI chip can consume. And the fifth layer is data center infrastructure, who builds the cooling systems, the thermal management, the power distribution equipment that keeps the whole facility alive. If you only own one of those layers, you are making a concentrated bet. If you own all five, you own the bloodstream of the AI economy, and you are far more likely to participate in the upside regardless of which specific reactor design or which specific company wins at any given layer. The first company I want to talk about is New Nuclear, and I want to be honest with you about why most people misunderstand what this company actually is. The surface story is that New Nuclear is building small modular reactors. And that is true, but it is not the most interesting thing about them right now. The most interesting thing is an acquisition they made that almost nobody talked about. They bought a company called Secure Transportation Services for $13 million. $13 million is a rounding error for a company with $550 million in cash on the balance sheet. But what they bought for that $13 million is something that cannot be easily replicated. Secure Transportation Services physically moves spent nuclear fuel and reactor components. They are the company that shows up with the specialized vehicles and the trained personnel and the regulatory approvals to transport the materials that nuclear reactors produce and consume. Now think about what happens if even a fraction of the small modular reactor build-out that is being planned actually gets built. Every single one of those reactors needs fuel delivered to it on a regular basis. Every single one of those reactors produces spent fuel that needs to be removed, transported, and safely stored. Nuclear just bought the only truck that can legally and safely make that delivery for the entire industry. In the California gold rush, the people who built the most durable wealth were not always the miners. They were the people selling picks and shovels and denim trousers and railway tickets to every miner. Regardless of whose claim paid out, Nuclear, with this acquisition, positioned itself as the logistics backbone of an entire industry that is just beginning to scale. They carry no revenue today. And I want to be transparent about that because it matters for how you think about position sizing. But $550 million in cash gives them a very long runway to survive the development timeline. And the strategic logic of owning fuel logistics for a growing nuclear industry is genuinely compelling. The second company is Oklo, and this one is the most controversial name on the list, which in my experience usually means it is worth spending extra time on. Controversy in investing is frequently just a proxy for uncertainty, and uncertainty is where opportunity lives. The thing about Oklo that I find most interesting is not their reactor design. Although it is genuinely innovative, it is the fact that the U.S. Department of Energy selected Oklo for advanced negotiations under the Surplus Plutonium Utilization Program. Let me translate that into plain English. The United States government has been sitting on a stockpile of surplus weapons-grade plutonium for decades. Storing it safely and securely costs taxpayers real money every year. The Department of Energy chose Oklo as the company to use that plutonium as bridge fuel for advanced reactors. What that means in practical terms is that the federal government is giving Oklo a fuel supply advantage that their competitors will not be able to match through any amount of private capital or engineering ingenuity. You cannot outspend the federal government's plutonium stockpile. You either have access to it or you do not. And Oklo does. Their partnership pipeline includes Meta, Nvidia, and Equinix, three of the most sophisticated technology infrastructure companies in the world. Companies that do not sign partnership agreements for publicity reasons. They sign them because they have done the technical and commercial due diligence, and they believe the technology will deliver. Oklo is sitting on approximately $2.5 billion in cash, so the question of near-term survival is genuinely off the table. Their first test reactor is targeted for around mid-2026, and that milestone matters enormously because the stock market will price the probability of success well before the reactor goes online. The opportunity for investors is in understanding that milestone calendar ahead of the crowd, not after the press release. NuScale Power is the third company, ticker symbol SMR, and I want to start by acknowledging what happened to this stock in early 2026 because ignoring it would be dishonest, and dishonesty in investing is lethal. From its highs, NuScale lost roughly 80% of its value. That is a devastating drawdown by any measure, and if you held through it, I'm genuinely sorry because that kind of loss does real damage, not just financially but psychologically. But the reason for that collapse is critical information because it tells you something important about where the stock is now versus where the business is. The primary driver of NuScale's prolonged decline was not a fundamental business failure. It was the liquidation of a large institutional stake by their biggest shareholder, which created a sustained mechanical wall of selling pressure that had nothing to do with whether the company's technology works or whether the regulatory position is intact. And here is what I want you to understand about that dynamic. When a large force seller finishes selling, the supply overhang disappears. The stock does not have to fight against that pressure anymore. NuScale remains the only company in the United States with Nuclear Regulatory Commission design certification for a small modular reactor. That certification took years and cost enormous amounts of money to obtain. Competitors who want to catch up must go through the same process, and there is no shortcut. Real customers, the Tennessee Valley Authority and the Romanian Nuclear Electrica project, are in their pipeline, and commercial deployment is a 2032 to 2033 reality. The market will price the improving probability of that deployment long before the first reactor generates its first kilowatt. The stock is still in a downtrend, and I am not suggesting you rush in tomorrow morning, but it belongs on every serious investor's watch list right now. Vicor Corporation is the fourth company, and this is the one I want to spend a moment celebrating because it represents everything I have always believed about how real wealth gets built in investing. Vicor makes power conversion modules. They are small components, not glamorous, not the subject of breathless television coverage, not something you would bring up at a dinner party to impress anyone. What they do is take electricity, from whatever source it comes from, and convert it into the precise voltage and frequency profiles that modern AI chips need to operate safely and efficiently. Here is the business reality that makes Vicor so interesting. Not a single GPU on Earth operates without a power converter. Nvidia's most advanced AI accelerators, the chips that cost tens of thousands of dollars per unit and that every hyperscaler is desperate to acquire, are completely non-functional without Vicor's components doing their job. That is what I mean when I use the word indispensable. Unlike every other company on this list, Vicor is profitable today. Right now, in the current quarter, real revenue, real margins. Recently upgraded revenue guidance reflecting accelerating demand and a new licensing agreement for their power system technology that generates royalty income going forward. Royalties are the best business model that has ever existed because you invest in the intellectual property once and you collect revenue from it indefinitely. Vicor is boring in the best possible way, and boring companies with essential products and genuine profits are where patient investors build real, durable wealth. The market often ignores these companies precisely because they are not exciting. And that lack of excitement is your advantage if you are paying attention. Vertiv Holdings is the fifth company, and Vertiv is the one that ties the whole story together at the building level. Think about what an AI data center is at a physical engineering level. It is a building that consumes tens of megawatts of electricity continuously, generates extraordinary amounts of heat from 100,000 chips running around the clock, and cannot afford a single moment of unplanned downtime because the contracts and the service level agreements that these facilities operate under make downtime catastrophically expensive. Every one of those facilities needs a complete power distribution system. It needs a thermal management and cooling infrastructure that can physically remove the heat that those chips generate before the chips destroy themselves. It needs redundant power pathways, monitoring systems, and the kind of engineered reliability that does not fail when a single component has a problem. Vertiv builds all of it. Their customer list is Microsoft, Amazon, Google, and Meta, every major hyperscaler building the AI infrastructure of the next decade. They do not care who wins the AI model race. They do not care whether GPT or Gemini or Claude or something we have not heard of yet ends up dominating the market. They sell their infrastructure products to all of them, and all of them need what Vertiv makes. The analogy I keep coming back to is Cisco in the late 1990s. Cisco did not bet on which websites would succeed. They built the routers and switches that all websites ran on, and they became one of the most valuable companies in the world as a result. Vertiv is generating free cash flow, their revenue is growing, and they are profitable in the current business environment, which puts them in a completely different risk category from the pre-revenue nuclear names earlier on this list. That lower risk profile is worth something, particularly when you're thinking about how to size each of these positions relative to your overall portfolio. Now, I want to talk to you about something that is more important than any of these five companies individually, and I want you to hear it as seriously as anything else I have said today. Getting the thesis right is necessary. It is not sufficient. In 2025, thousands of retail investors got the nuclear AI thesis exactly right. They identified the energy bottleneck, they bought Oklo and NuScale and New Nuclear. They were right about the story. And then they lost 60, 70, 80% of their capital on a correct thesis because they bought too late in the move, or they held through the collapse hoping it would come back, or they never had a clear plan for when they would sell. The thesis being right did not save them, Because investing is not just about identifying what is true, it is about buying at the right time, sizing the position responsibly, and having a written plan for when you exit before your emotions get involved in the decision. There are three things that would have saved most of those people significant the pain. The first is understanding where a stock is in its cycle before you buy. Stocks that have already made a large, fast move upward are priced for perfection, and perfection is fragile. The time to buy is during the quiet period, the basing period, when nobody's excited and the stock is moving sideways and the headlines have moved on to something else. That is uncomfortable, which is precisely why most people do not do it. The second is position sizing that matches the risk profile of the investment. A high conviction, high volatility, pre-revenue company should represent a small slice of your portfolio, not a large one. If it goes up 5 times on a 2% allocation, your portfolio grows meaningfully and you feel great. If it goes to 0 on a 30% allocation, you have damaged your financial life in ways that take years to recover. The math on asymmetric loss is brutal, and most people do not internalize it until they have lived through it once. The third is having a written exit rule before you enter any position. Not a feeling, not an intention, a rule written down, decided before the stock is moved and before your emotions have become invested in the outcome. I will sell half my position if the stock doubles. I will exit if it falls 20% from my entry. Whatever your rule is, write it down before you buy, and then follow it without negotiating with yourself when the moment comes. Here's where I want to leave you, and I want to be straightforward with you, the way I would be with a friend sitting across the table from me. The energy build-out that AI requires is not speculative. It is already happening. Microsoft and Google and Amazon and Meta have committed hundreds of billions of dollars to data center infrastructure that needs power, and the grid cannot supply it, which means nuclear will have to. Which means the 5 companies we talked about today: New Nuclear with its fuel logistics mode, Oklo with its government backing and cash runway, NewScale with its regulatory certification that competitors cannot shortcut, Vcor with its essential and profitable power conversion business, and Vertiv with its complete data center infrastructure platform, sit directly in the path of the largest capital flow this economy has produced in a generation. But I will tell you the same thing I've told investors for 40 years. Information is just the starting point. What you do with it, how disciplined you are about when you buy and how much you commit, and when you are willing to walk away, that is what determines whether you build wealth or just accumulate stories about the stocks you almost made money on. You now have the framework. You now have the 5 names. The rest is entirely up to you. And I genuinely believe you are capable of doing this, right? If you take it seriously, go do the work.